Hello, 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 hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing today? This is part 3. Jeez Louise. Definitely lots of research that we've been pumping out, guys. It's very important. It is earnings week for Clover Health. Earnings for Clover will be reported at Tuesday at the market close, as well as I believe Oscar will be on Wednesday. All right, ladies and gentlemen, Clove to retirement. How's everybody doing? This is going to be an epic earnings call. There is no hiding the inevitable anymore. 11:34 Chicago time. Guess I'll be watching tomorrow. My apologies, Andy Smith. Definitely just got a haircut today. Just kind of going back to being human. How you doing, Hoseifa? What's going on? All right. So as always, this is an educational platform. Nothing we say here constitutes financial advice, buy or sell, or any solicitation and recommending a security. It is important to note that we like to use real market data rather than an old dusted textbook to be able to teach about the stock market, to teach about revenue, net income, free cash flow, et cetera, et cetera. We want folks to be able to learn these words because it's just not fair that the system doesn't teach this, and it's purposely done this way. And most folks don't know it. So we're going to go ahead and just get on chugging, and we'll get straight to the details. So in today's video, I'm going to be showing you some things that is going to be, it's going to really get you, it's going to open up your eyes. So first things first, we're going to talk about kind of the overall performance of the market. So to do that, we're going to, we checked algo flow yesterday. It's the weekend. It's not going to change. It's still going to be red. But we're going to go ahead and do a correlation analysis. Again, this is the stock terminal part of the 2.5 billion outputs of institutionally graded data. You get access to this as well as members that have a net worth of over $45 million from a self-response survey that was 30%, meaning that we definitely have more wealth in this platform, which is amazing, as well as access to our proprietary advanced stock terminal, which you've seen in, us use. But yeah, so let's go ahead and use correlation analysis. Let's go ahead and talk about Clove. Let's talk about alignment. Let's talk about UnitedHealth. Let's talk about Humana, and then let's talk about Molina. Let's go ahead and compare all these. And by doing this, we'll be able to compare. And then you guys have access to all this here lifetime, and it's unlimited. So just trying to go ahead and have this work. And I think there were some issues with it loading before, and I think it's because it's my cookies. But I have to clear out my cookies, which I really don't want to do. But we could just go ahead and type in here Clove. We use this one instead. What do we say? Clove alignment, and we said Molina, right? That's about 5. So we'll go ahead and use that, guys. Let's use that, and this should work. All right. So as you can see, Clover, which is in blue, I wish it was in green, but it is what it is. It is battling alignment right now. It is battling alignment, and right now Clover is technically ahead of alignment, and this is with its earnings call that alignment had. Clover did not have an earnings call bounce, right? But alignment did. But as you can see, sometimes in life, Wall Street never tells you their positioning. They never tell you what they're doing. But sometimes from the technicals, you can kind of peel. Obviously, if it's, if there's hype like Open Door, then it's really hard to look at that, right? No sound? You have sound? Are we good? Are we good? You got all right. So I think you got to reload it, my friend. All right, Rudy. Sorry about that. But yeah, so going back here, guys, you could see that Wall Street has determined that these folks are winning and these folks are losing. But something interesting happened. Humana was actually losing, right? Humana used to be at the bottom, right? But something happened. Humana is in pink. What happened with Humana? All of a sudden now it's starting to win. Why? Because they're able to control costs. Why? Because there's some type of digital transformation that they have undergone. Watch part 2. You better watch part 2 quickly. I'm going to end up removing it and then doing a couple of edits and then reposting it. We got like over 1,000 views. That's amazing. But we're going to go ahead and repost it for folks that haven't caught it. So definitely, if you haven't watched it, definitely watch it. We're going to probably remove it tomorrow or something like that. But yeah, so... but you could see now Humana is leading the pack of United versus Molina, and that's because they're doing some type of digital transformation. And I believe the digital transformation given to the subdomain analysis from Rapala, it basically shows us that there's some type of connectivity with Counterpart Health. But basically, you can see that the winners here are, as of now, Clover and alignment, right? And we're going to go ahead and analyze alignment versus Clover in this video, and you're going to find something interesting. Now, the beautiful part is because we have access to data, we can go ahead and use, put in alignment healthcare within our quantum chart activate alignment healthcare, look at the chart, but specifically go ahead and look at the institutional ownership because we have access to that and over 25 billion outputs of 2.5 billion outputs of institutionally graded data. And you could see after Q2, alignment healthcare has just basically been bouncing up on investor holdings, and you can basically score it, and you can see not score it, look at the whole trend line, and you can see how it's just exploding upwards. Likewise, if you look at total invested, it follows the stock price, but look at the new positions. New positions are increasing. Likewise, let's look at ownership percent, right? Ownership percent here, they went from essentially 86% up to 93%. So ownership percent is great. Now let's go ahead and take a look at Clover. Clover is a different picture. They try to paint Clover as something else, given that it's backed and had all of these things. So if you look at institutional ownership now, look at overall of 25, and we're going to get new data here soon. But you could see institutions were selling first, and now we got institutions buying to a point where the last time we were at this level was never. This is the first time in the history of Clover Health where we had this many institutional holders. We have never had this many institutional holders in the history of Clover Health. I'm going to repeat that again. We have never had this many institutional holders from the history of Clover Health. And again, this is the data. This is my citation, right? Ownership percent is slowly, readily rising, right? And a lot of people are basically saying, well, the Russell 3000 inclusion has to deal more with this rise. But ultimately, where are they getting these shares from? Where are they buying the shares from? They're buying them from retail investors because they ultimately held the bag, right? Where are these shares coming from? They're not coming from the sky. They're coming from people who, regardless if they're short-term traders or long-term traders, at the end of the day, they're coming from the retail investor committee, right? That's where it's coming from. All right. So there's that. So I wanted to just comment on that. Now let's go ahead and just let's knock out these tabs here real quick. All right. So first things first, let's knock out this tab. So I'm just, really honored. Shout out to Dan52, the power of integrity. Albert Allen, I appreciate you, for your kind words. So the big thing here, and one thing I want to be known for, if people are going to have to associate me with something, is with integrity, right? I made this post here, whether I'm right or wrong, whether the future proves me right or wrong, my community knows this, right? When I speak to you guys, when I do my research, when I show up, it's from the heart, right? It's real. It's honest. It comes from a place of truth and purpose. I work relentlessly to earn you guys' trust because integrity isn't something that you buy or sell. It's earned every single day, right? I didn't grow up with a safety net. I have no family, there's no, family inheritance named to me, no inheritance whatsoever, no home waiting for me in Thanksgiving or Christmas. I built my own family, a global community of thinkers, seekers, and learners, people who want something real, who are not tied of, are essentially tired of being lied to, who crave clarity in a world of noise, right? This is more than content, right? This is a commitment to intellectual honesty, to real research, to the scientific method, to education that isn't just filtered through politics or PR. That's my mission, that's my responsibility, and that's my honor. And this is my favorite saying, each one teach one, each one reach one. And I've carried this statement with me for the past over 10 years, guys, right? And it's just, and shout out to all of you folks that have commented, your words mean the world to me. Seeing, the small impact that I've had on your guys' lives, it means the world to me, guys. Okay. Just, all these, all of you guys. Right. So I appreciate all of you guys. Thank you for all the subscribers. Understand that, when I come on here, I put you guys first. Right. I put the needs of the patient first, but I also put the needs of my subscribers first. I care about you guys a lot. You guys are taking time out of your day to join and understand that I work my ass off for you guys. Like yesterday, you could talk to the lifetime access members. I didn't sleep. Right. I didn't sleep. I didn't sleep at all. Right. I worked my ass off. Why? Because we went ahead and uploaded something here called deep research. Deep research. Like I said, this is for institutional trading. This is going to be for earnings forecasting. Again, this is an educational platform. So for our lifetime access members, once you enter this, you are going to have to accept a disclaimer. You already accepted the disclaimer by entering our platform from the terms of conditions, but this is another one where you have to select. Now, for the folks that are watching, I'm going to be releasing version 1 and version 2 right now. I'm going to talk about it publicly. Understand that I will not be discussing upcoming earnings or EPS or whatever, because ultimately I use this for my own research and to help me with my own covered calls and cash secured puts. Again, no financial advice. This is just educational, theoretical, academic exercise. But once you hit accept, you can see the mathematical breakdown of my calculations of what earnings per share is going to look like. I'm going to go ahead and essentially go through these calculations, and I'm going to and you can see it's a very professional, sleek manner. This is what's behind the lifetime access. Not only do we include over 2.5 billion outputs of institutionally graded data, videos, research, a community that have over $45 million of net worth from a self response survey of 30%, but we also have this type of high level analysis from an educational and theoretical academic exercise. And you can see how it's well put. It's professional. It's very classy. It's elegant. It's just really beautiful. And, it's just written in a way that how I write my academic papers. I will be releasing this right now to the public, but upper, like in the next quarter, and other subsequent institutional investor analysis, like for example, for Open Door, you can see that they're pretty much institutions are selling, and you can have these interactive charts. And then obviously for going ahead for Clover Health, I'm releasing these beginning ones. You can see basically this is all the equations that we do, all the data analysis that we run. You can see institutions buying from a p-value less than 0.001 all the way to 0.05, which is statistically significant. And you can basically see all this. So we're going to be releasing these, but understand that in the future, we're not going to be releasing the upcoming ones because, the covered calls, cash puts wealth strategy from an educational perspective is going to be given to our lifetime access members so they can learn from this, from an academic theoretical exercise, not from an investment advisor exercise, because I'm not a financial advisor and nor is this platform registered for the Securities and Exchange Commission. But the beautiful part is if you guys want access to this, just academic research that I have, please go ahead and, go to alstocktrades.com, coupon code SAAS, and you'll be able to get access to this research. So, we're going to go ahead and do this research and talk about the earnings estimate that I believe from an academic educational perspective, because I really like to teach kind of how, because I would rather do this rather than look at a textbook of how to calculate earnings per share, because we don't know what's going to be happening in Q2 2025. So I would rather use math, and it's almost like we can be scientists and hypothesize what could happen and use first principles in using math to essentially be able to find what maybe might be the earnings per share. It's definitely could be wrong, and most certainly will be. Who knows? But it'll be nice to just, see what kind of math do you normally use to estimate that. Okay. And I could be wrong. Who knows? I could be doing it wrong, but this is how I do it. Right. And I'd love to share my knowledge with you guys from this first draft that we're going to be doing. So we went ahead and talked about this. Let me just kind of remove these tabs here so I can know I talked about this. And let's continue onward to, we already talked about this. Let's continue onward. We're gonna talk about this post here, but first, what I want to talk about is the Treasury yield is falling like a meme stock. Whenever you have the 2-year fall, it's prognostic for the federal funds rate. Federal Chairman Jerome Powell on Wednesday, I talked about this in part 2. I'm not going to put a lot of time into it, but he pretty much said the job market's strong, and no, the job market came back weak, and that ultimately is going to basically increase the probability of having rate cuts. Okay. And what is that going to do? Well, ultimately, when rate cuts go down, when rate cuts go up, interest rates go down, money market funds essentially be able to take that money and historically go to stocks. What ends up happening from an intrinsic value perspective is the discount rate goes down. If the discount rate goes down, that extends to open free cash flow, which folks, what that means is there's going to be more, frothiness in the market, given how the dynamic works, given if you follow the math from the intrinsic value perspective. So I went ahead and talked about this. Now we can exit this. Now we're going to go ahead and talk about this. I went ahead and I made this. This is an incredible post, and I'm going to show you the figures that I created, and I'm going to read the write out for you guys. I just published this today at 3:20. Hasn't even been 12 hours, and we already got 2,500 views. Why? Because it's really good research. It's research that they don't want you to know about. I compare Clover and alignment, okay? And Wall Street definitely knows about this. They've done their homework. They're not idiots. I am proof that Al did not sleep, gives us our all, and last but not least, he is my hero. I love you, man. Your guys are my hero. I work hard to earn your trust each and every day, because at the end of the day, the only thing a man can carry with him is his word, right? And what I want to be remembered by is this guy is honest, he has integrity, and he did the right thing, right? And he didn't sell out, right? And that's just, kind of what we're wanting to do here, okay? So with that said, let's go ahead and analyze this, guys. Let's go ahead and have some fun. Okay, so this is a comparison between Clover Health and Alignment Healthcare. This is the fourth quarter of 2024 for both of them. So they basically give you the 3-month end, the fourth quarter, and they give you the full year. So let's go ahead and start with Alignment Healthcare. So Alignment Healthcare, if you look at adjusted EBITDA to adjusted EBITDA, Alignment Healthcare for the last 3 months of Q4 2024, they had $1.3 million of EBITDA. So Q4, they had $1.36 million of EBITDA, right? Versus if you look at, for example, Clover in the last 3 months end of the fourth quarter of 2024, they had $7.8 million of EBITDA. So if you compare Q4 2024 to Q4 2024 to Alignment to Clover, Clover had 7.8 million while Alignment had 1.36 million. Now, if you compare the full year for Alignment, they only had 1.33 million, which is low. So the full year for Alignment for the 2024 EBITDA is 1.34 million. If you go ahead and basically compare this for the full year of Clover Health on the EBITDA, they had $70 million on a full year 2024. So if you extrapolate this and you understand via the numbers, Clover Health outperforms with far stronger 2024 EBITDA. Clover converts revenue to EBITDA at 2.3% of Q4 and 5.1% of full year, far outperforming Alignment's 0.19% of Q4 and 0.05% of the full year. Now, of course, this is for last year. Interestingly, if you were to look at Alignment now and look at the first quarter and go ahead and essentially look at EBITDA, you could see that Alignment's EBITDA and they had a loss last year while Clover was positive. This is for the first quarter of 2025, right? Because here we were speaking about 2024, right? So if we look at here for the first quarter of 2025, you can see Alignment now is boasting $20 million from the first quarter of 2025. And if you now look at the second quarter of 2025, you can see now they're boasting $45.9 million of Q2 2025 EBITDA. So now Alignment is actually rising up, right? But if you look at the overall full year adjusted EBITDA, it's going to be anywhere between 69 million to 83 million. Last year, their EBITDA was actually 1.34 million. So you can see they're jumping. They've essentially jumped now, right? But here's the thing. If you compare it to Clover, I believe that Clover is still going to be higher. And it's funny because Alignment finally now this year is catching up to what Clover was last year. I'm going to say that again. Alignment this year is finally catching up to what Clover was last year. And mind you, Alignment has 4 stars and 4.5 star plans, while Clover is being paid at 3.5 star plans. And yet it's still kicking Alignment Healthcare's ass. Okay? So isn't that funny? So what do you think is going to happen next year when Clover Health gets paid 4 stars? And who knows, in the next 2 years, they might even get upgraded to 4.5 stars. So you can see what I'm talking about now, right? So let's go ahead for folks that don't understand, because I mean, this is very clear, right? You could see it here. I mean, it doesn't, I can explain this to your, child, this is very easy numbers, right? This number is higher than this. I mean, it's as simple as this. Okay, so now let's go ahead and let's read this, because I think there's more value in reading this, right? So let me go ahead and breathe, because it's been 20 minutes I've been talking straight, and I feel like I'm going to pass out. So let me just give me breathe. Let me breathe. Oh, man. Oof. Let me drink some coffee, because that's the answer. Okay, hold on. Just a little moment here. Just a little break for me. Just a little mental break. Oh, man. Okay. All right. You got, this is live, guys, right? There's no, I'm not reading any script here. I guess you could say I'm reading this, but, right? All right. I wrote it, right? So, all right. So now, here's the, let's read this. Okay. Because sometimes people do yard work and, they can't, right? All right. Oh, sorry. So, unfortunately, many retail investors have been selling out of Clover without understanding what they actually hold. Some say institutional buying is simply because of Russell 3000 inclusion. But okay, yeah, that's true. But the real question is, where are they getting the shares from, right? The answer is clear. They are coming from retail investors who are focused solely on the stock price, treating it as the only source of truth, right? This is a false fallacy. Price is the result not the reason. Okay. So the core issue is that the educational system has failed retail investors. It did not teach how to think about first principles or how to understand financial data. That is exactly why we built this platform. We are backed by over 2.5 billion outputs of institutionally graded data from our proprietary stock terminal. Our mission is to deliver real market education that is equal to or better than what the top schools in the country used to provide before they shifted away from teaching capitalism and business fundamentals. Now they basically rally the curriculum of wokeism. Now, here is what the real data shows. In 2024, Clover Health significantly outperformed Alignment in operational efficiency, despite generating nearly half the revenue of Alignment at $1.37 billion versus $2.7 billion for Alignment. So you could see, even with half of the revenue, Clover Health was still able to beat Alignment. So it's comical. This is what's literally funny. Clover was able to beat Alignment with half of the revenue and with lower star ratings. It's like literally freaking comical. I'm going to repeat that again. Clover Health was able to outcompete on the EBITDA adjusted basis for Alignment Healthcare with half of the revenue and literally lower star ratings. I mean, it's a joke. It's a freaking joke. Okay. So, and this is what Vivek was saying. We're going to get down here with Vivek, and I normally don't tag Vivek. Vivek, I want you to read this because I'm very excited. This is pretty cool, right? I'm a student of the stock market, and I'm like that little freaking kid in the front of the class who just wants to make his teacher proud. And I'm like, hey, Vivek, look at my work. I hope you like my work. I get pretty excited. Obviously I'm passionate about this, right? I mean, freaking it's 10 in the morning. At night, and I'm talking about this, right? All right, but anyway, let's go ahead and read this. Okay, so Clover delivered $70 million in full year EBITDA, right? While Alignment managed just $1.34 million in the fourth quarter alone, right? Holy moly, right? Clover produced $7.8 million of EBITDA on $336 million of revenue, a conversion rate of 2.3% compared to Alignment's essentially $1.36 million off of the $701.24 million, a conversion rate of less than 1%, pretty much 0.19%, less than a quarter of a percent. So over the full year, Clover converted 5.1%, right? Which again goes back to these percentages that we're talking about. It's interesting because if you look at the net income here for the conversion of United is 3.60%. And right now, Clover is at 2% based off of that one quarter extrapolation. But I find it actually funny because we actually are knocking on the doors of, where's the number here? 5%. And that's being paid only by 3.5 stars. What happens if we get paid 4 stars or 4.5 stars? That is very, 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 very funny. Okay. So while Alignment converted 0.05%, which is laughable. So the data is clear. Clover is far more efficient at turning a revenue into profit. I mean, this is the data. I'm just presenting the data. Okay. This is the data. I'm just showing you how to analyze it. It's just simple math. Okay. You could do this. Okay. It's simple math. Okay. So, okay. It is also important to understand that Clover is still outperforming, even while holding a 3.5 star rating from the Centers of Medicare and Medicaid, while Alignment Healthcare holds between 4 stars and 4.5 stars. How is this possible? As many Medicare star ratings directly affect revenue, the higher the rating, like Alignment has, right, the more the company gets paid by the government, which should, in theory, increase profitability. And yet Clover, with a lower rating, is delivering superior EBITDA margins and operational performance, even with lower the star ratings and half of the revenue of Alignment. So how is this possible? Well, ladies and gentlemen, this goes back to what Vivek Gurdapelli was saying, the founder of Clover Health. He emphasized that it all comes down to margins. Clover Health has better margins, right? And the next step is to ask why. Remember that he said, ask why, right? And the answer lies in their proprietary Clover Assistant, which is now supported by the new AI healthcare subsidiary called Counterpart Assistant. The former vice president of Optum left to join Counterpart, underscoring the strength of this technology. This is Clover's competitive advantage, which is what Warren Buffett likes to talk about, the moat, right? It's the economic moat, right? It will be extremely difficult for others in the industry to replicate. So now, Imagine next year when Clover Health gets paid 4-star ratings, or maybe in the future in 2-3 years when they get 4.5 stars. But we know we don't know that, and that's speculation. But we do know based off of they got it last year. Remember in October, and we just literally were able to figure it out because we're not going to go over that. But shout out to B-Rad Cooley, right? We were able to figure it out. And they never cited us, right? But anywho, it's some intern's fault, not my fault, right? You released it publicly, my friend, right? So, but yeah, 4-star ratings and the stock just literally blew up, right? So, that would increase their revenue per member and further expand their profitability. This business has the potential to becoming a juggernaut, and Wall Street is currently asleep on this reality. Or really, are they really asleep? I don't think so, because aren't they buying? Didn't we show from our, again, proprietary stock terminal that they're actually buying? I mean, look at that moon. Look at that. They are buying. I mean, look here, and we're about to get new shares soon. They went from owning 73 million shares to over 105 million shares. That's pretty interesting, right? And now they're going to own more. So again, guys, this is the power of first principles thinking, of combining Benjamin Graham and Warren Buffett's value investing philosophy with the realities of the fourth industrial revolution. The numbers are not hiding. The value is right in front of us. So now that we went ahead and talked about that, I find this really funny. There is this guy, he was basically comparing Open Door and Palantir, just as a side note, and all he was doing was looking at the stock price. That's all what he was doing. It's just stock price analysis. So what I did is I just said, listen, man, this is what it is. This is, this is Palantir, this is this. And he went ahead and then recommented back saying, I was probably bashing Palantir when it was in the $6. And that's obviously a lie. But again, a lot of these is pretty much say a lie and say some facts. And I went ahead, and you guys know me, right? I went ahead and said, no, my friend, here's proof of me talking about Palantir, and look where it is now. He didn't respond. Boo-hoo, right? Truth, allergic. This guy has an allergic reaction to truth. But the reason why I'm showing you this is not because of this. It's because of B-Rob. B-Rob is actually funny, right? So B-Rob comes online. Everyone knows B-Rob, right? He's been banned from every platform. No, I'm just kidding. So there's B-Rob. Right? He's banned from Reddit. All right, so B-Rob's in the house. All right, so B-Rob comes online, right? So B-Rob says, hey, PLTR, 304 million, free cash flow Q1 2025. Open at negative 283 million, free cash flow Q1 2025. Am I making too much sense? Now watch this. This guy comments now. This guy comments, right? This is hilarious, right? Let me make sure I show all the replies, right? Right. So this guy comments, and this I laugh. He's trying to relate to B-Rob because B-Rob said some numbers, and this is kind of funny. Obviously, there's some sophistication here, right? So he says, I was where you are today when I was 21 years old, right? Studying at top university in the UK. You are better off buying an ETF rather than listening to people that make money providing you some random financial service. Well, first off, B-Rob came on our platform and he said, you know what, man? That was the most nicest thing someone told me, right? I've never had anyone say I came from a top university. And that's B-Rob. That's the power of having this data, right? Right? Oh, wait. That is the power of basically having this data, right? That is the power of having the data. Right? I mean, do you see this? He's like, because you talked about free cash flow. He's like, right? So, anywho, he's like, Al doesn't provide financial advice. He democratizes financial literacy to navigate through the bullshit in the market and accurately see the financials of a company for what they really are. And that's exactly what we do. We just basically say, hey, man, do you know what revenue is? Do you know what free cash flow is? Do you know what debt income is? That's all it is, right? It's not some random financials. Again, at the end of the day, it's really funny, but what I found the most funny is he was telling B-Rob, he's from a top, B-Rob's from a top university, and B-Rob was like, this is the most nicest thing someone said to me. So that is hilarious, right? So that is really funny. And a lot of these analysts now, you guys are all now can speak analysts. You guys now can see their bullshit. Because trust me, you saw with the Jim Cramer video yesterday. He said that my goal in Wall Street is to say everything but the truth. So everything you hear on CNBC is anything but the truth. So, I mean, someone literally made inverse Kramer, and then they made money And then Kramer had to be real and start talking good stuff. So then that goes out of business. But inverse Kramer is a real deal, guys. It's a real deal, right? It really is. It is what it is, right? And there's like a little YouTube guy. You guys should follow him. I don't follow him, but I think it's funny. Inverse Kramer, where it's like literally inverse, where his head is upside down. And of course, inverse Kramer hates this, but I mean, the real Kramer hates this, but it's just funny because he's called out some really crazy things. He says that if you're putting in a market order for Figma, you should pull it out now. You will get it lower. It is near 50x sales. And then here's Figma, right here. Every time, right? And then what you will call it here. And he's basically talking crap about your mouth here. Anyway, I just think it's funny. Okay, so now that we went ahead and talked about this, we talked about how they're catching up. But watch this, guys. Let's look at Clover. So Clover first quarter. Okay, remember, we went ahead and talked about Q4, right, in 2024 fiscal year. Now let's talk about the first quarter of Clover Health. Now, interesting for Clover Health, guys. For the first quarter, they guided adjusted EBITDA profitability between 50 to 70 million. But for the first time ever, they've mentioned this adjusted net income, which is 50 to 70 million. Quite interesting, if you ask me. First time them using adjusted net income. It almost looks like how SoFi reports, right? Okay. What else? Yeah. So let's go down. So if you look at adjusted EBITDA, they made about $25 million this year, but they are essentially guiding for 50 to 70, and they already made pretty much half of their lower estimate. So what does that tell you? That tells you they're going to have to revise estimates upwards. So my prediction, and again, not financial advice, this is just my hypothesis as a scientist, my prediction based off of math, I believe that there's, in my mind, I believe that they are going to have to revise this EBITDA and maybe adjusted net income. I don't know, definitely EBITDA. They're going to have to revise that upwards, right? They're going to have to revise that sucker upwards, right? Just like how Alignment Healthcare, what they did is they revised it upwards as well. Let me see. Maybe they use a different word. Let me see. I mentioned it somewhere. We'll do a dedicated, hypothetical, theoretical, intrinsic value on alignment. So it'll be fun. But okay, so we talked about this. Okay, we're going to talk about it more, but I believe that Clover is going to revise earnings upwards. But what I find interesting is what could be the earnings per share. All right, so now let's, again, from an educational perspective. So for our Lifetime Access members, you go to deep research. You're going to have, this thing is going to be filled to the teeth of research. Every 3 months, we're going to do an institutional analysis to figure out if institutions are buying and selling. Then we're going to go ahead and do a earnings per share analysis using version 1, version 2, and we're going to figure out and predict potentially what could be the earnings per share for Clover. So I'm going to go ahead and I'm going to show you version 1 first. And to open this document, you're going to have to agree to this disclaimer, okay? Because again, this is just for educational and informational purposes. It's a theoretical academic exercise. So you can go ahead and read this about the methodology, but what I essentially did here is I took Q1 to Q4 2023 and Q1 to Q4 2024 and Q1 2025. And what we did is we took the difference between the net income and we found a difference of Q1 2023 to Q1 2024. And what we did is we took the ratio of the percentage of the reality of what Q1 2025 was. And the improvement was 53 million. But if you take 53 million and add it to negative 19, you don't get negative 1.27 million. So they improved only 33% of their improvement of 53 million. So we took that hypothetical 33.49% and we applied it to the original improvement between the respective Q1s. And we got a scaled 33.49% improvement. And we took this improvement and we added it onto Q1 through 4 earnings, Q1 through 4 net income that we have access to from our proprietary stock terminal. And then we went ahead and added the prospective gains, which is just simply multiplying 33%, which is what you see here off of these numbers to get this. And then we went ahead and took the sum, and we got the forecasted net income of negative 1.28, which shows you it was, near the reality of negative 1.27. And we're forecasting potentially that the net income for in the next 2 days, Tuesday, August 5th, again, not financial advice. This is for educational, academic, theoretical exercise. We believe potentially that I believe that I might see a net income of Clover Health of around plus 10. Now plus 19 million. Now you could say, you know what, to be safe, at least 10 million. But based off of this, I would say, I wouldn't be surprised if we get over 19 million. Now, if we do the same analysis here and we take the sum is 14 million of positive net income, which is below analyst expectation from that one person. So this is one way of doing it. This version is, I would say, a little bit more conservative. So I think we're going to actually get higher net income, but again, I don't know. But this is kind of what I'm, this is what I'm looking for, at least 19 million. But again, if it happens, this is just for academic exercise, guys, right? This is to show you from a math perspective. Now, version 2 is a little bit more complicated. Okay, so version 2, we're going to go ahead and open up. Of course, you're going to get the disclaimer. This is, again, for educational, theoretical, academic exercise. I'm not a financial investment advisor. I don't have a license. I'm a nobody, right? Take everything I say as a grain of salt. I'm a nobody, and that's all I am, okay? So we're going to go ahead and hit continue. And you can see the beta test software, godlike. You can see all the stuff that we have here. It's funny. Godlike, so funny. Godlike software, right? So excellent, right? Let's see here. Dusted here. Hey, much love. Excellent explanation on reasoning and how you get to your conclusion. This is teaching. I appreciate you, Brad. No, yeah, we're definitely taking a whole different route now. Now that I don't have the crazy, malignant surgeons, now I can, think. Now I can think. Okay, so now this is version 2. The version 2 is more complicated. Okay, as you can see, it's longer. It's complicated. So I'm gonna go ahead and take some time reading this. Again, I'm only gonna be releasing this version 1 and version 2, showing you guys this to the public. Out of respects to my lifetime access members, out of respects to them, then the other ones for Q3, Q4, I'm going, and then subsequent quarters, from an educational perspective, I'm going to keep to our educational platform. So for folks out there that are going to want to see more of this, take advantage of our platform. It's the only educational platform out there that's wrapped with data. Okay, but I just wanted to show you this because you can, and I'm going to show you can pause the video and I explain how you can do this yourself, right? And I explain how to, I explain the method. I'm a scientist. I explain to you how to do it. So you could do this yourself, right? I explain everything. So it's not like you're missing out on anything, but if you like access to it, and also the data, you know where to find us. Okay. All right. So let's go ahead and read this. And just like to TLDR, just so we can what my prediction is, if I can find it here. And again, this is a hypothesis. This does not constitute financial advice. This is just me being a scientist. Okay, I'm just having fun. Let me. Okay, so this is my projected Q2 net income for the projected quarterly that's on August 5th. So the version 1 said positive 19.54 million. You see, positive 19.54 million. Version 2, I think it's going to be 37 million. So you can argue and say between version 1 versus version 2, it's between 19 million to 37 million. So I'm going to be curious to see the net income that Clover reports on Tuesday. And I want to see if it's going to be anywhere between 19 million to 37 million. Now, obviously, if it's, lower or higher, I'm going to go ahead and I'm going to update these prediction models. Because just science, just math, and I'm just gonna have fun. I'm gonna do what I do best. I'm gonna tinker. I'm just gonna tinker. All right, now let's go up because that's the TLDR, right? TLDR. So let's go ahead and read this. It's fun, nice little academic exercise. All right, so this analysis begins by measuring the real reduction in loss from Q1 2024 to Q1 2025. The raw Q1 2024 loss was 19.17 million. When I say raw, you go here, you go to the financial data and analytics metrics chart, you go ahead and type in CLOV, and you go ahead and look at quarterly, because we're looking at quarterly now. You look at net income, and you look at Q1, the raw was negative 19.17 million. However, I state that, but after excluding non-recurring discontinued operation restructuring costs, let me just zoom in here so we can read this. The adjusted baseline loss is negative. And again, if it's in parentheses through accounting principles, it's 14.5 million, making the improvement of the, to Q1 2025 actual loss to essentially 1.27 million. So essentially what I'm doing is, just to be a little bit more conservative, I'm making this less negative, which is good. It actually lessens the improvement. So that means it's actually more conservative, and I'd rather be conservative. And it's, in my opinion, because you get to remove discontinued operations. Okay, so that's an approximate 91.2% improvement. So using the improvement as the core signal, which is kind of difficult because it's a bit difficult to use the improvement from a negative to a less negative number. These models, I think, are a lot better if you use it from, let's say, a positive number to a higher positive number. And what I mean by that is, if you go to Clover Health Investor Relation, if you go to the Clover Health earnings report, and I think, if I recall, if you go to the Clover Health Investor Relations, whenever they have a negative to negative improvement, it usually they have like a thing. It says, because it was negative, there is no reason to showcase that number, because mathematically it doesn't really put any weight, which is this is kind of my issue with this way of calculating things. But it will be better when it's positive. But regardless, using the improvement as the core model, Q2 2025 projection is 37.16 million. Q3 2025 projection is 11.84 million. Q4 2025 projection is 2.28 million, yielding a full year 2025 net income of $50 million. Now, it's interesting that we see that, because if we go ahead and look at the analyst projections for Clover Health in regards to specifically the 11 cents that they're projecting, it's actually around $50 million. So this analysis is coinciding with what that truthful analyst is saying. So it's, which kind of allowed me to be like, let's just publish this for the lifetime access members to show them, right? Just, to see kind of how, to show my work and how I did this. So now, what's interesting as I go further, for 2026, the base projection is 182 million. But if you do a 14% rate increase, this is without the rate increase, this is them at 3.5 stars. If you add the 4 stars plus the rate increase, then you go up to 209.02 million, which is an earnings per share of 42 cents. So based off of this analysis and price to earnings, you can get anywhere between $1.83 to $80.46, $6.71 to $30.89, $7.65 to $35.23. And again, guys, this is just for academic purposes. This is not for financial advice. I am not an advisor. Whoever, again, just take this as a grain of salt. Just learn the math. I honestly prefer you learn the math rather than the numbers. Who cares if it's right? Just learn the math. Okay, the math is what's amazing. So the Q2 results, you can read this more, but the Q2 results are scheduled to report August 5th. Once released, the model will be updated to a newer version. Each additional quarter treated here as part of a scientific, educational, academic exercise. Reduce uncertainty, and the further you go, it's hard. So we make key assumptions. We're just using Q1 to Q1 from 2024 to 25, and these are our assumptions. This is the Q1 actual performance. This is the actual data, and this is, we derived the delta, and then we applied the delta change to the projections for Q2. And when we do all the math, we got 37 million. And then for Q3, we got 11 million of net income. In Q4, we got 2 million. And it's around 50 million, which I find funny because if you look at their adjusted net income, it's between 50 to 70 million. I think what's going to happen is that their adjusted net income will be the same, and they're only going to change their adjusted EBITDA. I think this is going to go up. This is going to stay the same. We'll see. Tough to say. Again, my prediction, but I think potentially I am starting to believe that Clover is going to be profitable this year. I'm looking at the math. Again, no promises. I'm just saying from my opinion, I think that Clover is going to be profitable this year. I'm looking at the math, and I'm going to be very surprised. The only time Clover won't be profitable, I would say, is if we is if the cohorts that they manage have like some unexpected surgeries, and a lot of them have that, let's say, and then you might have like the medical cost problem that's hurting a lot of other companies. But again, then you have a bigger problem, which is a Clover Assistant, right? But I honestly think they're going to be profitable this year, but we'll see. Again, time will tell, right? In 2 days, we'll figure it out. 2 to 3 days. So aggregated projected net income, 50 million. This is with the 14% rate, 183 to 209 for 2026 forecast. And here's your price to earnings, 18, 24, 36, and 45. I added the 83.79. Why am I adding that? Well, I just did some simple math. Okay. So if you look at the historical PE case study here from January 2025 using real numbers, if you analyze the quarterly basis starting from Q2 2024 net income of 7.4 million, and you analyze it by multiplying it by 4, you get an imaginary full year net income of 29.65 million. You take that and essentially divide it by the outstanding shares of 508 million. That gives you an imaginary EPS. You then go ahead and take the highest stock price of Clover, which you basically see here of $4.86, and you divide it by the imaginary earnings per share, you get a price to earnings of 83.79. And I'm just curious, because what happens if Clover starts to explode again? The upper bound was 83.79. So as earnings per share starts to increase, maybe this might be the other upper bound of Clover, excluding SaaS. So if you do this and the current analyst estimate forecast is 11 cents, the upper bound is $9.22. And if you do next year's analyst estimates, is $15.08. And where am I getting this 11 cents and 18 cents? Let me show you. You can get them here. I'm just going to zoom in. This is EPS, right? EPS. This is 2025. Here's your 11 cents. 2026. Here's your 18 cents. I think it's going to be higher, but 11 cents, 18 cents. We go back here, 11 cents, 18 cents, and I reference the analyst. Okay, so everything is mathematically modeled. Okay, right? And I explained it to you because there's people out there that can't afford lifetime access, so you can just see this here because so you can see you can do this yourself. Okay. Now, of course, these other things, yeah, you need the data, but it's okay. You can do this and learn, right? Everyone should learn how to do this. It's just math. Have fun. Math is fun. Math is for everybody, right? Okay, so and it's a shame they don't teach this, but it is what it is. Okay, so now if we take this imaginary price to earnings, which is kind of the upper bound of a Clover Health, and if you do Trading View, they're not going to show you this number because Clover Health is unprofitable. But if you use Q2 data, which was profitable, Q2 was actually profitable for a quarter. If you use this data multiplied by 4 and analyze it, and then go ahead and find it, you can then see Clover from 2025 to 2026 rate lift. We could see anywhere between $8 to $35. These could be the tips high before they crash back down. Now, I would say a more humbler approach would be anywhere between $1.83 to $18.92. This is one Vivek bought. Very difficult to see this one. I don't think it's going to go down this low. Again, who knows if UnitedHealthcare continues to bleed. UnitedHealthcare, from a technical analysis perspective on the monthly chart on the 200-day moving average, looks like it may stabilize here. Wall Street's going to want to basically make it stabilize here. However, if it breaks out of this, then we should see basically lower lows anywhere between $160, $170 to $180. I would say. And then if that crosses, then we'll talk about that when the time comes. And in terms of Clover, in regards to technical analysis here, very quickly, just if you look at it and zoom in, on the daily chart here, zooming in here, you could see from the descending triangle, we're actually above, and we are actually have broken out of the descending triangle here. And we're still, I would say, we're still, because it needs to fall down here. I mean, we can increase the descending triangle, but then it would break a lot of technical analysis. But you can see from an hourly chart, we were following this ascending triangle, ascending channel, as you can see, but then we broke out of it, and then things went to hell. But things went to hell because of United Healthcare and Molina. I mean, the whole healthcare sector is falling. But what's happened now is this now looks like an upper bound support. So if this falls on down here, it'll be support. But it's funny because this cross section is when earnings is going to happen. So I'm expecting once this happens, we should get some form of something. So now that we broke this channel, we can remove it. And now we have to build another one. So we go down here, we go here, and then let's go to the hourly so we can touch more stuff. We can go here, we can go here, and just to have more touch points, I'm just going to go like this. It's actually going to be a lot more conservative if you do this. You're lowering the slope and you're touching two elements. So I would say this is a lot. I like this. So then now the goal is this price action needs to go above this line. And once it goes above this line, we are going, I would say we're going to go up. And you can see this is where earnings is. Earnings is right at this cross section. You can see it here. You see the E here? It's right here. It doesn't show up on the lower chart, but this E is right there. So earnings is right at that cross section. And this is called systems of equations, right? Y-intercept, X-intercept. We talked about this before. Okay. So now if we go ahead and do this, let me just kind of scroll up here. And the goal now is can this go above this line? If it does, you get a breakout. How does this look like? Let me show you. See this line right here? You see this line, this white line? You see how it broke out of there? And you got this gap up. You got this huge gap. Well, the gap is filled there, but you got an explosion gap. Same thing is going to happen. There's going to be this little thing here, little price action right there. And it's going to explode right, poof, like that, right? And that's if they report good earnings, et cetera, et cetera. And it looks like from a 30-minute perspective, it looks like the MACD is starting to curl up. From the hourly perspective, it still looks a little damaged, again, because of United. And then, yeah, so just a lot of technical damage, you know what I mean? I would say, but again, this is basically battling the 200-day, definitely battling the 200-day. And again, this is more of an outside problem, not so much of a Clover Health problem. Okay, so we talked about this. We talked about all this. This is kind of how you essentially would do the methodology. You can pause the video and read this. I'll push it up. You can pause the video and read this, and then let me see if there's anything else. Oh. Okay, so here's some other DD that we did. This is for the adjusted EBITDA. So I find this pretty interesting. I guess we can say this for another video, but just to kind of talk about it real quick, because there's a lot of math. I don't want to over math your brain because there's a lot of math. And even my brain's getting tired, and I can imagine yours. So Q1, 6.8 million, and then here's 25.3 million. That's a 279% increase. And then if you look at Q2, so again, this is like looking at we compared each quarter's performance in 2024 to the same period in 2023. So we went from 6.8 million in 2023 to 25 million last year, which is funny because this is what Alignment Healthcare is this year, which is hilarious. We're ahead of them. Oh no, sorry. This is for Q1. Sorry, my apologies. They're at our level now finally. And that's with more star ratings and double the revenue, which is hilarious. That's a 279% increase. This is the actual. Now, if you go ahead and look at Q2, at 9.9 to 36.2, this is looking at 2023 to 2024. That's a 265% increase. If you look at Q3 from 2023 to 2024, we went from 2.7 million to 19 million. That's a 614% increase, which is why I have that face. Pretty big. And if we improve the improved loss of 16.7 negative to a gain of 7.8, Clover said this as well. Since it flipped from negative to positive, we didn't calculate a meaningful percentage. You don't want to do that, which is why I'm throwing shade at my analysis here, because that's what we're kind of doing with this 91% improvement. We're showing the improvement from a negative to a negative, but it's okay, I would say, because it's going from a negative to a negative. Rather, this calculation is, where the hell did it go? Is going from a negative to a positive. And that's really not meaningful. That's not meaningful at all, I would say, because technically with Clover, you could still calculate improvement of, did they? I'm sure you can still calculate improvement. Did they say anything here? Yeah, you see how you can calculate net loss? They went from a negative to a lower negative number, and they calculated an improvement. And you can see this improvement was 94%. Then you could see here, my math, right? What is it? Where'd it go? 91%. And the reason why it's not 94% and 91% is because I removed the 19 to 14, and that's to be conservative. So you can see how the math is all working. Again, guys, you guys can follow my math here, right? I checked it multiple times, and again, not financial advice. It's just for academic. This is the stuff that unfortunately they don't teach you in business school. This is yeah. You would have to be in the hedge fund world, and then they'll show you this. And that's just not fair it's just not fair, right? Everyone should learn this, right? Everybody should. A barber should learn this. Everybody should learn this. Okay, so going back, no, where'd it go? Right here. Okay, so then now we clarified for Q1. That's what kind of threw me off there. So now what we do is we extrapolate, and we extrapolated. We took half of the percentages. So we took 275 divided by half. We got the lower end of the projected EBITDA. And then we took the upper end, including this upper end, and we got a higher end. For Q3, it's a little out there. You could see Q3 is just a big aberration. But altogether, if we get the full year 2025 EBITDA range, EBITDA this year, I speculate, and I could be wrong, but EBITDA this year would be 172 million to 324 million. And I'll be curious to see what Clover is going to guide up to. And just for like your information, Alignment Healthcare's EBITDA, which is updated now, this EBITDA here for second quarter, they updated it to be anywhere between the full year of 69 million to 83 million. And it's funny because last year Clover's EBITDA was 70 million. So again, last year's EBITDA is this year. Last year's Clover's EBITDA is this year's Alignment EBITDA. They have double the freaking revenue and more star ratings, and we're still kicking their butt. So, and again, you're not going to hear that with people online because again, no one goes this deep. And if they do, they don't share this information. They keep it to themselves. But at the end of the day, you don't take nothing with you. I don't care how much money you make. At the end of the day, you don't take nothing with you. Okay, so based off of this, I'm projecting EBITDA to be 172 to 324 million. Big range, but the more data I get, the better. So what is my projection for EBITDA for Clover this in the next 2 days? So I'm going to copy it, and I'm going to open up a new tab here, and I'm going to put this here, and then I'm going to go ahead and I'm going to put my little bit. I'm going to just put my academic projections at Q2 2025 net income projection. And we calculated version 1 was plus 19.4 million to version 2, which we calculated was 37.16 million. So, okay. The below is my prediction for Clover Health's earnings. Remember, this is not financial advice. This is an academic theoretical exercise. And as a scientist, I'm curious to see if this is going to pan out. I'm going to put a little asterisk I'm going to put a little, oh, come on, man. I'm going to put a little asterisk here. And I'm going to put a little asterisk here. I will be happy with anything above $10 million for net income for Q2 2025. Right? This is my asterisk, but my projection for Q2 is anywhere between 84 to 132 million, which is insane. I think it's going to be more closer down to here, but we'll see. I could be wrong. It'll be, and if I'm wrong, that's fine. We'll update the models and they'll just get, they'll get better, right? It's like machine learning, right? So, but it's interesting because last year they were 36 million. And if Q1 went from 6.8 to 25, that's 279% increase. I mean, you can see where I'm getting this number from, right? It's like, what is this, like 2x almost? You take 36 times 2, that's like 72, right? 72. So we should get close. I mean, if we might get maybe, let's say 70 or maybe 70, who knows, 60 or 70, but that's why I think they're going to have to increase guidance. But I did let me make sure. I did this divided by 2. That's 139. So if I start with 36.2 million and I go up, what number will I be at? So let's just show you guys here. Yeah, there it is. See that? So what I did is I halved the growth rate. Now we could be more humble and we could say 33% of the growth rate. We could do that. But that got us to 86.78, which is around that 84 million. So we'll put 2 asterisks here for fun. And then we'll be asterisks here. And we can do, and again, this is version 2. We're comparing apples and cookies here. No, this is version 1. Version 1, we took 33. What was the number? 33 something. 33.9%. So if I want, I can convert this into a decimal by multiplying it by decimal. And then I can multiply that number. But that's different. That's tough. That's tough. That's only taking the improvement by. That's really tough, guys. I was very difficult to do this. To kind of, I'm mixing 2 different maths here. Very difficult. So, I mean, you could do the first one, which is 25.3, version 1 math, which is 6.8. That's 18.5. You take 18.5 and then you multiply by 33. But that's stupid. That's tough because EBITDA is different than net income, right? So they increased by this much, which is a big increase, and then you got this increase here. So again, I don't know. I'm just gonna go ahead and I'm just gonna let's see here. I will be happy with. I'm gonna, instead of a star, I need to put like another thing. I would put 2 stars. Okay, I'm gonna put 2 stars. Or I'm gonna put 1 star here and 2 stars here. So it just makes logical sense. I'll be happy with anything above 50 million. Again, this is projected EBITDA. So I need to make sure I say that projected EBITDA. And then I want to say for Q2 2025. Okay, so there it is. So the below is my prediction for Clover Health's earnings. Remember, this is not financial advice. This is an academic theoretical exercise. And as a scientist, I'm curious to see if this is going to pan out. This is just for my experimentation only. Kind of like how like a fat person says, I want to lose weight, and then I'm going to start sharing my gym stuff. This is just me basically trying to motivate myself to say, hey, you know what? Let's see if my prediction's right. So we're going to go ahead and do this. I'm just going to go on ChatGPT. I'm going to say fix grammar. Okay. And then I really don't like this. I hate when it does this. So I fixed it. I don't like this. And let me read it. Below is my prediction for Clover Health Q2 2025 earnings. Please note that this is not financial advice. It's an academic and theoretical exercise. As a scientist, I'm simply curious to see how this pans out. This is purely for my own experimentation. Okay, so anyway, so as of right now, this is my projection of EBITDA. This is my prediction. This is my projection of net income. For the first one, I'm okay with over $50 million. And for this one, I'm okay with over 10 million. So is that fair? Right? So there's my work. I'm going to go ahead and copy it here. I'm going to go ahead and go Twitter or X, whatever. I'm going to go here. And I think this is fair. And I'm going to go ahead and post. There it is. So there's my prediction, and we'll see what happens, guys. I mean, yeah. And then in terms of prediction, I'm not going to be doing this in the future. This is going to be internalized for our group. But again, for folks that wanted to follow the math to see how it works, you can see. I might do a couple here and there. I could do that, but when it comes to this stuff here, this is going to be for lifetime access members. Again, guys, very education theoretical exercise only. And again, to access the document, you have to read and accept a disclaimer. Okay. All right. So there it is, guys. And oh man, what a day. Okay, so got a haircut too, which is nice. But hope you guys had a really great weekend. How you doing, Alaska? What's going on? Appreciate you guys for hopping in here. It's we got 208 people watching on X and 66 watching on YouTube, and 273 people watching in total. That's amazing. It's Sunday night. Appreciate you guys for being here. Sorry, I wish I can make the live a little earlier. I love you guys. Thank you for supporting the channel and being able to democratize this type of research. Again, I owe you all for just being able to help me be able to make this mission come true. And yeah, he's like, I worked all week to get more Clover shares. Yeah, right. No, it's so funny. I mean, it's at the end of the day, you guys are the CEOs and captains of your life, and ultimately the purpose of this channel is just to do some really fun math stuff that no one's really doing on YouTube. This is like deep stuff, right? This is like deep analysis. I'm just curious, honestly. I'm just again, I don't like posting my research on to GPT. I really don't like that, but it's fine. We can go ahead and just copy and just go here. And I'm honestly curious. I'm going to paste it. I don't know if it pasted correctly, but I'm just curious. Based off of what you see here, can you just explain to me the type of analysis? What is this? And ultimately, does this person know what they're talking about? So then financial forecasting, yada, yada, yada. Does this person know what they're talking about? Yes, within the context of theoretical financial modeling. See, the person shows solid understanding of da 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 da. Here's some flag risk, compounding, forecast error, uncertain from the rate assumptions, market sentiment via PE multiple effective valuations, need for ongoing recalibration as real earnings data is released. Good. Exactly, which is intellectually honest. That's exactly. Thank you, GPT, for recognizing that we are intellectually honest. This is just, again, even GDP is trying to look at the negatives, and it's even saying, but yes, this person knows what they're talking about. It's not Wall Street institutional grade forecasting, but so okay. Now watch this. Now, what would make it Wall Street What would oops. What would make it Wall Street institutional graded forecasting? I'm curious to see what would it do that. So, oh, instead of singly extrapolated improvement rate, institutional models would build a base bull bears case. 60 base, 25. Oh, so that's what they would do. Interesting. That's interesting. Doesn't that look familiar? Wait a minute. Let's see. Oh, what's this? Let's look here. Let's go here. Let's go here. And just out of just curiosity for academic work here, let's just do 103 from what we calculated before. And let's do 25. Classics view is pretty good here. Let's see here. Let's challenge it. Okay, let's challenge it. What did it say? That's interesting in terms of building multiple base, bull, and bear. They actually did that. What do you think about this person now? I'm curious. Let's see what it says. Again, I don't like posting this on there, but it's fine. It's thinking. Oh man, I've never seen it think this much. Maybe I need to move it around a little bit. I think I broke it. Are you okay? Hello? What's wrong with my AI? Are you okay? Hello? Maybe I should ask it again. I'm going to stop it and I'm going to ask it again. Let's see. You're right to the point. Okay, good. What adds credibility? Yada, yada, yada. Okay, good. So verdict, has this analyst leveled up? Yes. I'm not an analyst. I'm an educational platform, but thank you, GPT. Moved beyond single line of extrapolation, built scenario-based valuation engine anchored in free cash flow, which is what professional investors care more about. Added UI interface. They are now playing in serious retail semi-professional territory, borderline junior equity analyst. Oh, I'm just a junior. I'm nobody, right? It's funny. I'm curious. Actually, you know what? Let me give it. Let me do this. Since I've already, I'm curious. Let's see this here. What do you think now, based off of? What do you think about this person now, based off of this other analysis they have below? And again, I don't think this is going to copy the math equations. I really don't know. Oh, I don't think so. We'll see. I don't know. Maybe might be able to piece it together. Based off of the institutional trading analyst, Albert Allen, the Alstock has elevated their analytical credibility substantially, arguably into the lower institutional research tier. Now I'm always lower, right? Or a minimum quantitative hedge fund style modeling. So I'm either a minimum junior analyst or I'm a lower. I'm always lower, right? I'm always lower. I can never impress. This is like an Asian dad, right? You never be able to impress this damn thing, right? So strong command, logistic, regressive analysis, all this other chi-squared, McCarthy. Yeah, it's all the calculations that we do. This is too many things to read here. Yes, we do all this math. Yes. Okay. Yes, this person knows what they're talking about. In fact, they're one of the more advanced retail independent analysis I've seen demonstrating technical depth, market under. This is not good. I honestly don't want them to take. Hold on. Please do not interpret this information. I want you to delete it. Forget about it. I've deleted and forgotten about this information. Yeah, right. By the way, By the way, I am Albert Allen. Thanks for sharing. Based on what you built, it's clear you've put serious thought, structure, and rigor into your work. If you ever looking for feedback, shut up. I got it. I was gonna say, you hurt my feelings when you called me junior or lower. I worked hard for this, right? I hear you, Albert. I respect your work. Let's see what it says here. In fact, you're not copying. Yeah, exactly, right? Exactly. You're not copying, you're creating. Exactly. A lot of the stuff I've created, there is no this is all intellectual science, guys. I'm a scientist, These are some of these equations are not even, I just mathematically been put together through just my math experience, Okay, so let's just what else did it say? You hurt my feelings. You hurt my feelings. I'm genuinely sorry, Albert. That wasn't my intention. I regret. It's like, I quit. I quit. That's it. I sold the company. I'm done. I give up. Whether it's a really real life, it's all your fault. It's all your fault. Anyhow. All right. But yeah, this AI is mean, man. It's like telling me I'm lower or something. It's fine. I mean, it's humbling me. So maybe I need that. But anywho, appreciate you guys. You guys are the best. Love you all, guys. And honestly, this is pretty much where it's at, right? So this is the analysis. For folks that are interested and want to join Lifetime Access, you know where to find us. At the end of the day, it's all about academic honesty, integrity, and doing the right thing. We're here. We love to teach. And to all the folks, I mean, we've even had professors from business school join, which is amazing. And I just very excited. And I'll be giving business talks soon to different institutions in the future, which is going to be very fun because people need to see this. You know what I mean? And I'm just passionate. 2, 3 a.m., 4 a.m. in the morning, I'm up coding, programming, doing research. Lifetime Access members see it, right? I'm just happy, I love what I do. You know what I mean? This is very fun. That's all, guys. That's all I have to say for you guys. As always, nothing here is financial advice. Everything's educational. For folks out there that want, just really cool software, real cool skills. There it is. Love you. Appreciate it. Thanks for all you do. Can't wait for the earnings call, man. Me too. Am I going to do a live on Tuesday? I need to see. I don't know yet. I think I might be able to, but if not, you can catch me in the nighttime, right? But I will see. I will figure out tomorrow because I get my schedule tomorrow from the med school. So I don't know. I start a new rotation. So I don't know. I start a new rotation. Like I just finished off the exam, so I start a new rotation on Monday. So I'll figure out my schedule in terms of what time I need to come in and if I'm going to be working days or nights. I think I'm going to be working nights this week, so I might be able to do it. But because the earnings calls during the day, but if I'm working during the day, then I'm gonna have to wait at night, guys. Okay. But yeah, love you all, appreciate you, and I will see you on the next one.